Hey everybody, it's Larry Berman here. Finally back on in Canadian soil. It's been quite a while. Had a quite an adventurous trip in New Zealand the last few weeks. Went bungee jumping, went paragliding, went extreme whitewater rafting, did jet boating on the rapids. Anyways, took full advantage of all the hospitality. The people in New Zealand are absolutely amongst the best in the world. We just had a great time. Food, wine, everything. Thinking about wine and the Easter weekend, want to wish everybody a happy Easter. And I've got my 6 glasses here filled with water, hoping by the end of the weekend I'll have some of the finest wine to drink. But if that miracle doesn't happen, let's see what might for the stock market. So there's a big rumor out, you may have heard it, that market breadth is improving. The average stock is doing better now than the market cap weighted index. So in the month of March, that is a true story in the US. Marginally, but a true story. So here we are, end of February, end of March, equal weight S&P ETF, market cap weighted S&P ETF, and the white line is ahead of the orange line. And that tells you that the average stock outperformed. Now, 2 days ago, that wasn't true. And the last 2 days of the month it was. There wasn't really a point in the month, except for a first day of the month and very briefly here in the middle of the month, where the average stock was lagging. So for the most part, the breadth of the market did improve. When we look at the advanced decline line, and everyone will know that that's taking the cumulative number of stocks that go up on a given day, subtract them from the ones that go down, you kind of add it together. And so here we are now. So we're at a very interesting juncture here where the broad New York Stock Exchange AD line is up against the highs of 2021. Do we get a breakout here? Do we get a bread thrust of the famous Marty Swag bread thrust? That bread thrust started, months ago, and now is maturing. And so does it keep going? Well, I always ask, what's the catalyst for it to keep going? And that really has to do with what is the type of company leading the rally. When we look at the cumulative AD line for the NASDAQ, you get a very, very different picture. So the companies that don't make any money, the small cap, the micro cap, still not performing. And so the better the quality of the company, the better we're seeing the performance in stocks. And that leads us to looking at ETFs that represent market factors. So I've got 4 ETFs here I want to take a look at. You've got quality. So these are companies with better balance sheets, better earnings, overall cleaner, high quality companies, both on earnings and on balance sheet. VTI is the broad US stock market, call it the Russell 3000. The momentum factor, the volume factor, there's lots of other factors to consider, volatility, size, etc. But these are some of the major ones. And you can see that value has started to improve, but really lagging pretty significantly. When you look at momentum factor, you would have thought the momentum factor was doing really well. It has since the Fed pivot. But when you look at overall, quality is leading. So the better companies are leading. That's manifested by some of the big tech names that are heavily weighted in those indexes versus the broader markets overall. So that's really the story. And so the question is, does this keep going? And is this just a US phenomenon, or are we seeing it all over the world? So when we look all over the world, and we look at the MSCI Total World Index and the Total World Index on an equal weight basis, and we look at it on a year-to-date, we can see that market cap weighted index is still outperforming considerably. When we look at it on a 1 month basis, on a global, let's go back, this is on a 1-day lag, basically a little bit better on a month-to-date basis. So we've seen that in the US, we've seen it globally, but it's this much. So when you hear technicians say breadth is improving, that's true, and it's clearly a positive. The AD lines haven't broken out, and the markets are very overbought. But we heard from the Fed, we heard from Powell. They didn't reverse anything this week. They're looking at starting to cut interest rates probably as early as June, and that's all the market cares about. So as we get into April and May and Q1 earnings, we've got full employment on the economy. The GDP numbers for Q1 looking good. So earnings are going to beat, right? And so what is going to turn the market down? The next most bearish catalyst is the quarterly refunding announcement on May 1st. So we're okay into April. This grind can continue. Am I bullish? No, but the setup is there. The market can still grind higher here. Do you want to chase it? If you're a day trader, go for it. How much upside is left? I have no idea. But if the quarterly refunding announcement puts a lot of stress on long-term bonds, and you see that long-term yield curve, still yields start to rise again, that would be a catalyst for the correction. And if Treasury doesn't put a lot of coupon out for to fill the new supply and decides to go again more with bills, they're going to continue to fuel the rally here. So what's going to happen, we'll see. There's clearly some political at play where they want to improve the market ahead of the election. They're not officially going to say that for sure, but I think there's this, not a conspiracy is not the right word, but I think there's this underlying tone that people in power right now, in terms of Yellen, in terms of Powell, probably would not want to see Donald Trump as president again. I'm not saying for sure, but I'm saying probably. So we'll see how that all plays out. Stronger equity market, stronger global market in front of the election gives the tilt a bit more back to Biden, and he needs the help at this point. So we'll see as that plays out too. Anyways, market breadth is improving. Grind can continue. Am I bullish? No way, no how. I can't be with the valuations where they're sitting. This move up has all been on multiple expansion and very, very little in terms of, net realizable earnings growth that we're likely to see. All Wall Street strategists, they're all putting up their numbers. They're all chasing the market higher, as we often see. And so everybody's got the FOMO, and that's just driving things until that next bearish catalyst comes. Anyways, happy Easter, everybody. Whatever you're celebrating this weekend, have a great long one. And we'll look forward to being back on BNN on Monday.